Hi, Tic Tac Toe. Seems like I am alive now. Goodness gracious, but I was having a difficult time getting on live. Hello, Fly Girl. Okay, now I know I'm definitely live. Good evening, folks. Good evening, Robs. Welcome to you guys. Nice to see everybody again. Sorry, I had a bit of a mission trying to get on and running. Please, good evening, Tic Tac Toe. Goeienaand. Tic Tac Toe, you still have not. Jy het my nog steeds nie 'n WhatsApp gestuur nie. Jy moet asseblief my WhatsApp stuur want ek wil weet wat doen jy vir 'n lewe. Ek is seker jy is 'n finansiële adviseur en ek wil met jou gesels asseblief. Good evening JMF, welcome Mr. C, how's it? Folks, welcome, and I'm sorry that it's a few minutes late, but gee, I battled to get into TikTok live tonight. I don't know what was wrong, but we're on. Goeienaand JMF. Pick n Pay got a sale on Yeah, you tell my wife that. You tell my wife that. I don't know how many years it is, but I think it's most probably 10 years ago she decided that I should try a beard one day, and from there I was not allowed to shave again. So I've had a beard and we come to this agreement that I can keep it as short as I want. I'm just not allowed to shave it. She wants it at least like, you know, down here. I don't want it. This is the agreement. I'll keep a beard, but my length. Thank you very much. That was funny. Hi, Mark. How's it? Good evening. Hi, Elias Exclusive. Hi, Mr. Kornayfan. Hi, Elias Exclusive. Good evening. She's got you. Yeah, you know that. You know that. What you want to do for love, eh? Good evening, Eugene. Welcome. Hello, folks. Good evening. Anybody with any questions, pop them in. I'm going to be away for 10 seconds just grabbing a bottle of water. Okay. So, let's see. She does indeed, yes. Gebetsi, good evening. Yes, in the last few days I've had so many messages of people that I was trying to answer. I tell you, I don't know if I got to everybody. What's your view of the awesome gold high prices? Man, I'm very happy for anybody that's in gold. Congratulations, you picked the right time, you went in, fantastic. I know it's not going to stay that high, that I can tell you, and I know that there's this nervousness, I almost want to say, with people that are, is it at the top, should I sell now, should I consolidate my profits, should I carry on? And then you've got the guys that, you know, that are the high rollers and the gamblers, and they just like, let's buy more because the price is running. So I think it's awesome that the gold price has done so good. I know that it can't stay that high, or that it can't keep up doing what it's doing. I mean, you don't have to be, what's the word? You don't have to be brilliant in terms of investments to know that it's not going to keep up there. But yeah, for those that took the bet, went into gold, congratulations, they are doing well at the moment. I've never been a fan of one specific asset class, and therefore I never wanted to be invested in gold. But for those that did it, great stuff. Boost your investments as well. Well, that's good, man. I'm very glad for you if it did. You obviously made the right choices, and therefore, once again, Tic Tac Toe, I need to speak to you. Please, man, send me a WhatsApp. Send me a WhatsApp. Here's my number. Let me just get it for you again, yeah. 060 541 4685. Let's have a chat, me and you sometime, okay? Thoughts on becoming rich with the S&P 500? See quite a few videos, but not buying all the hype. You know what, Mark? The thing with the S&P 500 is the S&P 500 is not a fund. It is something that is we call it a benchmark that's created. So the S&P 500, they say this is the stock exchange, and we put all of these shares together, and if we were invested in this collection of shares on a day-to-day basis, this is how we would have performed over 1 year, 3 years, 5 years. And that S&P 500, if you were in that passive fund, because there's a lot of passive funds that uses that S&P 500 as the benchmark. If you've been involved in a bunch of those or in any of those portfolios, yes, you are going to do well over years. It's been proven. It's proven that it's doing well. So my opinion is, yes, if you want to invest in it, go for it. I don't think it's the be all and end all. That's my honest opinion. I think it is a great place to invest your money, that you will get good returns. But to me, it's not the be all and end all. And the reason why I say it's not the be all and end all, I've got a couple of global funds that I invest my clients' money in, and they are smiling all the way to the bank. Becoming rich. Look, if you talk to any business entrepreneur, they will tell you, listen here, you'll never become rich if you are invested in investments only. You have to go and start your own business. But it's because business or entrepreneurs see the upside of investing their funds into their business and then getting 100, 200, 300% return, which is not something that they keep up forever, but that can happen. I do think investing in the S&P 500 and other funds, you can become very wealthy. The thing with investments is it's the discipline to be consistent, which is more important than the portfolio and the returns that the portfolio gives. And that's what people don't understand. People invest in investment for 2 or 3 or 4 years, and then they're disappointed because they haven't had the 10 and 12 and 14% return that they were expecting, and then they change to a different investment. New cost, new this, new that. 2-3 years later, they do the same thing. Then they withdraw the money and they go and buy a new car. Then they start investing again. Discipline. That is the big problem for investors. They do not have the discipline to consistently invest. So, Mr. Hoffman, that's my opinion. There's lots of very good portfolios, good investments, but it is very much the responsibility of the investor to be disciplined that will determine whether you will become wealthy or rich. What is rich? Some people, R1 million is rich. For some people, 100 million rand is poverty. Very difficult. I think that's something that we have to start thinking about as investors. What do I see as rich? How much lower will the rand go? Well, the rand is actually not going lower. The rand is strengthening. The rand is strengthening against the dollar. And no, I will not give you an opinion with regards to that. I think that we're living in a very interesting world, especially with Mr. Donald Trump. Every day there's something about him. Every day he's saying something to get people up in arms. I reckon that we're going to see a very interesting time for the next 2 years. And then when it's time for the US elections, I think we're going to see another interesting thing because remember, with the Americans, you can only serve 2 terms. And I will not be surprised if there is some push for him to have a 3rd term and a change in their constitution to do that, which, if that happens, will even put the cat among the pigeons even more. But no, I don't think, I will not give you an opinion on the rand. All I could say is that at the moment there's lots of people smiling and laughing at everybody that keeps on saying that the rand is just going to tank. Look, it is a bit of an artificial thing because of emerging markets and all these complicated technicalities in economics. So the rand is not really doing all that well because the rand, well, South Africa is doing super fantastically. So it's very much to do with the worldwide economy and, like I say, with Mr. Trump and what he has to say. I wish I could explain all of this. I sit in these presentations sometimes where we listen to these economists And while I'm listening to them, it makes absolutely 100% sense. I can understand everything. But then to try and explain it to somebody afterwards, it's like, it blows my mind. I'm like, I know what happened, I understand it, but I don't know how to put it into simple language again afterwards. Any case, okay. So Essie, sorry I couldn't help you there. Eh? Eugene, hi. Can I transfer from a tax-free savings account, Nedbank savings account, to a different tax-free savings investment account? Yes, you can, Eugene. I actually made a couple of videos on that today because I've been getting the question quite regularly. So if you wish to change from tax-free savings account to Nedbank to tax-free savings account to Standard Bank or tax-free investment with Old Mutual, whatever the case might be, you basically have to go and apply with the new institution for the new investment that you want to do, be that a savings account or an investment. When that is done, there will be documents that they will have to help you complete, which they then send to your current service provider, which in your case is Nedbank. And then you will have to go and inform them, obviously. If it's a bank, you normally go and you inform them in person. If it's an investment house or insurance company, the financial advisor will do it on your behalf. They will then submit the new application as well as this document that instructs the first company, in your case Nedbank, to transfer the funds into your new tax-free investment. So it's basically more of an admin process than anything else. And either the bank person that's going to help you or the financial advisor that's going to help you should be helping you through that admin process. It's not a big deal, but you as the client will most probably not be handling it yourself unless you decide to make use of one of these direct platforms such as Easy Equities. Then different story. Then you might have to complete those transfer documents yourself. Mark says, I prefer a moderate gold fund within an endowment over 20 years. Absolutely, Mark. That is the thing. Is I have, in 30 odd years that I've been a financial advisor, I have seen many success stories of people doing long-term investments. But the success stories that I've seen on short term has been few and far between. To have really fantastic success on the short term and have an investment that absolutely explodes and gives you those mega returns on investment over a 2 or 3 year period, it's few and far between, and it has, trust me, a hell of a lot to do with luck. People think that it's all knowledge. It's got a hell of a lot to do with luck. So I agree with you, and therefore maybe I am too conservative for people, but that's how I believe to do it, is long-term investment. Tic-tac-toe says, having a few debts, should you always start paying more on the one with the highest interest rate? Not necessarily. And the reason why I say not necessarily is if you've got, let's say you've got a credit card, a bond, a car, and you've got 6 clothing accounts, Truworths, Edgars, the whole tutti. I know that the credit card has got the highest interest rate, and I know that the car and house then has most probably the lowest interest rate of all the debts. But here's the psychology behind it. If you start attacking your credit card, let's say your credit card is sitting at 100,000 Rand, you got yourself into a bind there, and you start paying extra onto that credit card. Yes, you are saving yourself more interest because you're putting more onto it. But it takes a while for you to start seeing the actual effect. And it discourages people. It's like somebody trying to lose weight. If you're not 100% committed, you will start big bang, and 7 days, 2 weeks later, it's just too much and you give it up. So I would say, if you've got these bunch of debts, then maybe start with the one with the smallest debt. You've got those 5 clothing accounts, and Truworths, you only owe them $1,000. Go kill off Truworths. It will give you a sense of satisfaction and accomplishment to say, I've paid off one account. Then the next one, Edgar's. Hey, I owe them 2,000 Rand. Go and kill that one. Another win. I've beaten that one. It's out. And every time you pay off one of those debts, you've got that extra money that you were paying towards that debt that you can now go and allocate to the next debt. So in the little scenario I've created for you, after you've killed off your 6 closing accounts, you might not have a lot less debt, but you will be on this winning streak that you will say, hey, I've killed off all of these, man, now the credit card is nothing. Now I'm attacking that bad boy. And then once I've attacked that bad boy, then I can do the next one. And then you can actually really start paying off the bad debt with the big interest rates. So I'm trying to just create a scenario here, and that's why I'm just saying, based on what you're saying, you should not necessarily always attack the one with the highest interest. But if you only have 2 debts, credit card, highest interest, car, lower interest, then yes, then I will definitely attack the credit card first, because that thing is killing you with its 21 or 22 or 23%. Sherry Garth, H2A family. Hello, me as an H2A, moet ons tax betaal as ons terugkom? Sherry Garth, I am going to carry on in English if you don't mind. I will answer you, but I'm going to answer you in English purely because I believe the majority of the audience is English, and it is the language that everybody understands. So, must we pay tax when we come back to South Africa? Not necessarily. So, as an H2A worker, you should be in a country or in a province, it's normally in America, where a dual taxation agreement exists between them and South Africa, which means that the farmer that you work for will automatically deduct tax from your income and pay it over as per the tax regulations in that country or in that province. Now, because South Africa has a dual taxation agreement, it says that if you are paying tax in another country on income that you're earning in that country, you do not have to pay tax in South Africa. Up to 1.25 million Rand. If you earn more than that, then yes, you could be, not necessarily, but you could be liable for tax in South Africa as well. The only thing that you have to do is you have to do it in your tax return, in which you show that you have been earning your income, and let's say it is America where you are, you've been earning your income there and you've been paying your tax there, so that the South African Revenue Service knows that you've already paid tax there. So as long as you do your local SA tax returns, there won't be a problem. What we do find is that people go over, they do the H2A work, they do it for 4, 5, 6, 7 years, and they never do a tax return. They paid all their taxes, no problem there, but because they haven't paid a tax return, when they then eventually do tax returns for SARS, then they get hammered with penalties by SARS, because SARS says, you're supposed to give me a tax return every year. Now, you haven't given it to me for 4 or 5 years, so now I'm going to hit you with penalties for not doing that. So you don't end up paying tax, but you end up paying penalties. So yes, if you pay tax where you are, it will not affect you when you come back to South Africa. Just make sure that you keep your personal tax returns up to date in South Africa. And if you don't have somebody to help you with it, let me know. I've got an international tax specialist that I refer all H2A and other international South African employees to, and we sort out their taxes there. Kindness says JSE All Share Index reacting new peaks every day. Do you advise investing in gold right now? Kindness, no. So JSE All Share Index, yes, it's been growing, and this is part of the wonderful effect that we were talking about earlier, about whenever America sneezes, then South Africa normally gets a cold. In this situation, it's a question of America flexing their muscles, and South Africa, some way or another, also gets some of the muscles. So our stock exchange is doing very well at the moment, and it has been doing very well for the last year or two. It's all technicalities in the background which I cannot really explain to you, Like I said earlier, I listen to economists explaining this stuff, and it makes perfect sense while I'm listening to them, but trying to then explain it to somebody else is a different story. But in any case, so the JSE doing very well. I will not advise anybody to go into gold, and not because gold is bad. Like I said, I'm very happy for everybody that's doing well in gold, but I prefer investments where there is more diversification. So I prefer to an investment that has a portfolio that has some gold in it, but some mining as well, maybe some silver, and maybe some Checkers and Pick and Pay shares, and British Tobacco shares and Naspers shares. That's what I prefer. I prefer that because at some point, gold cannot keep up this magical run that it's had. At some point, there's going to be pullback. And if there's pullback, then you've got all these other shares in your portfolio that comes and that stabilizes your investment. So no, I will never advise anybody to just invest in gold, and especially at the prices it's trading at the moment. It's had one hell of a run. So I won't advise anybody. But then again, I'm not a share trader. So go and find somebody that does share trading that you trust, or take your own risks, so to speak. If you feel you want to go for it, go for it. But just remember, with every risk you take, you have to take and accept the responsibility that if it goes well, you're smiling, you're making lots of money. If it goes bad, you have to take the pains that goes with it, okay? How can I contact you privately? Lerato, let me see, where is it there? I actually put in, Lerato, I put in my WhatsApp number earlier. Where is it now? Lerato, where are you? Okay, let me just put it in again. I put it in earlier, but here it is again, 060-541-4685. It's in the chat, Lerato. You are welcome to contact me. Okay. Eugene says, thank you very much. Oh, it's a pleasure, Eugene. I'm not even sure which question I tried to answer for you, but I hope it helped. Deb, sorry. Tic-tac-toe, I think, I don't know why you're sorry. I think that it was a very good question. Mtutu, hi Corey, may I ask please, why is S&P 500 ETFs performing so poor when Rand became strong? Yes, my man, that's one of the technical questions that you have to ask a portfolio manager. I honestly cannot tell you because I am not a portfolio manager. And to be honest with you, I'm not a big fan of ETFs in any case. I like actively managed funds and not passively managed funds. So to be very honest with you, Mtutu, I would have to call in a professional or a portfolio manager specialist to answer a question like that. And I do have a couple, but I don't think any of them are on call at the moment. I could maybe one night ask them to come and join me and co-host with me. Still need to figure out how to do that. That's the other thing. I see there's a little button here that says co-host. I'm going to have to figure out how to work it. Oopsie. That was not supposed to happen. Okay, there we are. Back again. Let's see. Kindness says, I'm retired. Did not use a financial advisor so far. I'm happy with Signia where I got some good shares. Well, fantastic. Kindness, if you did not use a financial advisor and you are doing well, then fantastic. Just remember that if you are invested with Signia, you're not invested in shares. You are invested in either unit trust or a portfolio. And Signia does have very good portfolios in unit trust. There's absolutely nothing wrong with that company. So as long as you have enough knowledge to understand your investment and to understand the portfolios that you are invested in, okay, and you know how much risk there is and what your expected return is, and you say, I can stomach that risk and that return, or how safe it is and how low the return will be because it's a conservative fund. As long as you understand that, you understand your investment, you're happy that you can manage it, then go for it. We very often find that people do very well over years with their investments because they read up on it and so on. And then something happens. They either have a bit of a wobble or they just don't feel like looking after it anymore. And that's when they start contacting us as financial advisors and say, listen, yeah, will you just look after it a bit? Mtutu once, Yola says, Mtutu feed it. Wait, that was not supposed to be happening. I can't see what that says. Oh, there we go. Yola says, Mtutu feed the ETF that tracks the US S&P 500, but its South African returns are heavily influenced by the US. Okay, so Mtutu, very good answer there as a matter of fact. I did not think about that because, like I say, I do not do ETFs. But yes, if it is an ETF that's invested if it's based on an international benchmark, then that S&P 500 might be doing well, but because of the rand strengthening, it eradicates a lot of that growth. So very right there. Thank you very much. Maybe Yola, you're the person I should have had as the specialist. Tic Tac Toe says, what goes up must come down. I think it's too late to start buying gold at this high. It is very possibly. Lorata says, I got it. Sorry. What are you sorry? Don't be sorry, people. The only time you're sorry is when you swear, and you shouldn't be swearing. Webster says, hi, Karai. What is the latest age one can start saving for retirement? Oh, there is absolutely no latest age for that. You can start whenever you want. Obviously, the sooner you start, the better it will be because the longer you invest for, the more compound growth you get. So if you can start when you are relatively young or very young, it's much better. But there's no latest age. So it really doesn't matter. There's no entry limit ages with any investment company as to what age you can and cannot start investing. So Webster, go for it. Whatever the age, you can start it. Hi, I retired. My funds are 30,000 Rand. How much taxes do I pay? You know what? I didn't bring my little tax calculation bookie. And it's a bit of a calculation, so let me get back there. Okay, so on 30,000 Rand, I think the tax rate is 31%, okay? Not 100% sure. And there's a calculation that needs to be done because there is a specific amount of tax you pay up to a certain level, and then the 31% kicks in, and then you go and deduct your rebates, and your rebates is based on your age because you get more rebates as you get older, and then you find out what the taxes are. So this calculation I can do for you, the very basic tax calculations I can do for you, but I do not have my little tax booklet here, so you can send me a WhatsApp and I'll work it out for you. Just know that with that type of income, there's always the possibility that you have more or other deductions over and above the normally primary and secondary rebates, okay? So it is possible that you can even pay less tax than what somebody will tell you if you've got other deductions that you can take off it. So I do normally and always recommend that if people want to know things like this in terms of their personal taxes, to speak to a tax consultant and let them help them with it. If your income tax situation is very basic, and when I mean very basic, you earn an income, you don't have secondary incomes and stuff like that, SARS will even help you with it, and trust me, they will not lie to you and take more taxes. It will be straight down the line. But otherwise, get yourself a good tax consultant. Eugene says, please explain active managed funds and passive managed funds, wanting to learn. Okay, so Eugene, the difference between the actively managed fund and the passively managed fund. So let's just go back to the S&P 500 or the JSE Top 40. So funds are created, and let's use the top 40. It's maybe easier to explain. So JSE top 40 fund would be, they go and at the end of every day on the JSE, they go and they say, okay, what was the top 40 shares that we had on the JSE today? And then they will say, okay, Naspers was number 1. And number 2 was British American Tobacco. And number 3 was Checkers. And number 4 was Amplats, whatever the case may be. And so they will judge them based on the value of that company, which is the best, all the way down to number 40. And then they will say, okay, based on these 40, proportionately, if we had 100 Rand invested in these top 40, how much would be invested in Naspers, that's number 1, and company X, that's number 40. So Naspers would have had 5 Rand, the next one would have been 4 Rand 90, next Rand 4 Rand 80, all the way to number 40, that would have only been 10 cents a share. And then they say, okay, if somebody invests their money today, we're going to take their 100 or their 1,000 Rand and we're going to invest it exactly according to that spread. So tomorrow morning, okay, or tomorrow evening, when the JSE closes again, they go and reshuffle all of these shares and they say again, okay, this is the top 40, Naspers is not number 1 anymore, they're now number 3, Checkers has moved up to 2, etc., and this is the value. Press a button and they reshuffle your money that you've invested exactly like that. So nobody is picking shares. Nobody is standing there and saying, okay, we're going to buy that, we're going to sell that. They literally follow this top 40 and how it changes on a daily basis with a button that gets pressed to say reshuffle, 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 reshuffle. And that is a passively managed fund. We don't have to do anything. We follow the benchmark and we invest according to the benchmark. An actively managed fund is where a fund manager actually sits and they decide, listen here, Naspers has slipped to number 5 on the JSE, but we believe there's value in Naspers and we believe that there's no more value in Checkers, for argument's sake. So let's go and sell some of our Checkers shares and let's go and buy some of our Naspers shares, and now we hold on to that. So they actively buy and sell shares in the fund to try and get the best possible growth. And that, in simple terms, is the difference between an actively and a passively managed fund. I hope that explains it to you, and yeah, that's why I like actively managed funds. Oh, thank you very much. Neems, thank you very much. I am proud to say that my shirts are normally bought by my wife. She is the one with the good taste. And she every now and again rocks up with a nice shirt and says to me, do you like it, don't you like it? And normally I do. Okay, Webster says, hi Corné, if you reach 65 and get monthly pension, does SARS still take a percentage every month? Yes, Webster, they do. So in terms of your pension that you start receiving when you go into retirement, that pension that you receive is now your new income, and you will pay tax according to that income. How much SARS will take will once again depend on how big the income is. So if your income is small, 10,000 Rand a month, you're most probably not going to pay any tax because you're going to fall below the tax brackets. But if your pension is big and you earn 50,000 Rand, 600,000 Rand per year, then it's big and you're going to be on a 36% tax bracket. So yes, you are going to pay tax, and whether they are going to physically take it, well, they never take it from you. Basically, the company that gives you the pension, they are responsible to pay the tax over to SARS. In certain circumstances, they do not have to do it, and then the responsibility is on you to ask them to pay it over, or at the end of the year when you do tax returns, SARS will come and say, hey, you didn't pay tax this year, we've calculated this is how much you owe us, give us that money now. But yes, you will pay taxes on pension fund. Enlightened Spirit, tax-free savings versus tax-free investment, what is the difference? It's really very straightforward. A tax-free savings account, okay, is literally a bank savings account. That's an account that you go to the bank, you open it up, you say, I'm going to save my money into this bank savings account, and the bank is going to tell you this is the amount of interest we're going to give you, and that is a tax-free savings account. You save with the bank. A tax-free investment is where you make use of these actively and passively managed funds that we're talking about, unit trust portfolios, where the portfolio manager actually invests your money and attempts to get you the biggest possible growth, and where you are not given a definite, it's a 4 or 5 or a 6% return on investment like the bank does. This is where they try and literally get you the highest possible growth depending on the amount of risk you're willing to take. And that's the difference between the two. Investment, always trying to get you the best growth based on your risk, and the tax-free savings, plain forward, just a savings account at the bank. Mike says, Kunai, do you know how the 4am club gets more than 20%? Mike, I actually do know how they get more than 20% on the investments, and it's because of the investments that the 4am club does is alternative investments. It's high risk investments which are invested in hedge funds, forex, cryptocurrencies, gold, stuff like that. So it's a much more aggressive investment style. We call it alternative investments because they do not follow the rules that is implemented on investment companies with their portfolios, where the portfolios manager must keep to certain rules about what they can and cannot do with people's money. Portfolios are more structured, where there's a certain amount of legislation to protect the client against a fund manager just going nuts and taking everything out of the fund and putting it into gold tomorrow. So on portfolios, there's much more structure and rules that must be followed for the portfolio manager in terms of the portfolio. 4am Club, they are actively searching for winners all the time, so to speak, and therefore it's a substantially higher risk investment that they do. And as long as they, how can I put it, as long as their bets comes off in terms of buying forex and selling forex and buying crypto and selling crypto, as long as that comes off, then the performance will keep on being good. What's the next one? Yeah. Tax-free SA is in the bank logo. Okay, correct. Sorry, 365. I'm 65 years. If you're saying that you want to invest 300 Rand and you are 65 years old, yeah, no problem with regards to it. Look, it's not going to build to a hell of a lot, but it will definitely give you something somewhere in the future that you can use to buy bread and milk. So it doesn't really matter. And that's what I keep on saying to people. It doesn't matter how much you save or how much you invest. As long as you are investing something, you are building up some capital for somewhere in the future that you're going to make use of, that you're going to need. Okay? So even if it is just 300 Rand a month, and even if you are 65 years old, trust me, you keep on doing 300 Rand a month until you're 75, that money will come in very, very handy. You're going to be able to, you might not be able to retire on it, but it's going to be very handy and of good help to you. Main BC, Mr. Boa, do you know investment plus 13% I can use for monthly income? Yes, I do. So, an investment that gives plus 13% that I can use for a monthly income. Main B, maybe it is not advisable, but Old Mutual's Global Equity Fund has given a consistent return of 14% per year for the last 25 years. It is a more aggressive fund, but based on the history for the last 25 years, that fund could potentially keep on giving that type of return, which is more than the 13%, and you can draw an income from it. So there you go. Sorry, 300,000 years old. What did they? I think we're now getting a bit confused. 300,000 years in years old. What's the taxes? I have no idea. I think I've lost you here. Now you're going to have to explain better. Oh, thank you, Mr. Tic Tac Toe. Appreciate the comment. You're 65 years old. I get that. 474759. I get how old you are. What I don't get is the 300,000 years in years old. I know you're 65, but the 300,000 is not making sense. Stefan says, what would you had 0 rand and then win 3 million rand? Well, the first thing is, if you win 3 million rand tomorrow, I seriously advise you to go and put it into your bank savings account and not touch it for at least 3 months. That's the first thing. Because what happens when people come into money suddenly is suddenly all those dreams and goals and everything that they have thought about over all the years, suddenly everything comes rushing back to them and they're like, wow, now I've got a lot of money. Now I can start my own business. I can buy my own house. I can buy that car cash. I can go and buy my wife jewelry. And people just start spending in their head, but before they know, they actually physically spend that money. And by the time that they actually come back down to earth, they have wasted a lot of it. It's like buying a new car. I don't know how many of you have ever bought a new car, but you want that new car. You get into that thing and it smells so nice. It is so beautiful. You drive it out of that lot and you are the king of the world. You just want to show it off to everybody. Every opportunity you get, you go and drive that new car and you show it off. And then 3 months down the line, when the smell is not that rich anymore and you've had to wash the car a couple of times, and now you start feeling the pinch of that repayment and the insurance and the petrol that's more than, suddenly that car is not that sexy anymore. Now it's exactly the same with investments. When you get that 3 million rand, you are going to be so excited and so ready to just go balls to the walls with it. Hang on to it for 3 months so that you can get over all the hype, okay? So that you can learn how to say no, because if you start telling people that you've got this money, you're suddenly going to have a lot of friends and you're going to have family that you never heard of that suddenly wants to be your best mate. So once you've gotten over the hype, once you've learned how to say no to everybody, once that money is there and you know it's an asset, but it doesn't bother you anymore, that's when you will start making good financial decisions. So if you can, and you win 3 million rand, start talking to financial advisors, specialists, go and do your own research, start getting ideas from people that you can trust with regards to what you should be doing with the money, and give yourself enough time to plan as to what you are going to do with it into the future. And that's what I would say to anybody that gets into such a big amount of money. Just take your time. Oh, thank you very much. Beautifully explained, she says, or he says. Thank you very much. Tic Tac Toe says, 4 AM is Cornelis Sunday, is very aggressive investor. He is indeed. We often have arguments, me and him, about investments. Not arguments, differences of opinion. Sassy Cloud says tax-free, savings is tax-free, but how can you reduce your tax on a tax-free investment? It's the same. Remember, whether you're on a tax-free savings account or tax-free investment, all the growth in the investment is tax-free. That's the lovely thing about tax-free products. Every cent of growth is tax-free. So you don't have to reduce your tax on a tax-free investment. It is tax-free. The only difference is, if you're going to have a tax-free savings account, this side, tax-free investment, this side, and your tax-free savings account gives you 5% growth, and your tax-free investment gives you 10% growth, then in 20, 30 years from now, the tax-free investment is going to be worth 100% more than the tax-free savings account because you got 10% here and 5% there. It's the only difference, but there's no taxes. Masobuso, good evening. Is it good to invest in easy equities? Masobuso, I don't know. I've seen easy equities. I've looked at their platform, but that's about it. Remember, I'm a financial advisor. I sell investments for investment houses. So I look at products from investment houses that I believe is good, and I invest my clients' money there. But easy equities is a platform where you as an individual can make your own choices and you can go and invest there. You then take the responsibility. You have no financial advisor or anybody that backs you with advice. So for this reason, I don't really go and look at their products. I don't go and look at their costing. I really don't care too much about how well they do not do, because easy equities is of no value to me. So whether it's a good platform, I don't know. I've heard people saying that they're investing in easy equities and they're very happy with the growth that they've got. But then I know of other people that's been investing in easy equities and they're very disappointed. And it's purely because they had to make their own investment choices and they do not understand investments properly, so they made the wrong investment choices. If you are good with regards to your own investment choices, then absolutely, I think easy equities is the place for you. You go and do it. Personally, I just can't tell you if it's good to invest with them. My opinion is, if you go and look at companies and their sizes, if a company is as big as easy equities, there must be something good in them. Because a bad company does not grow into a big company. I have never heard of any bad company, any bad business that's grown big. If you're bad, you go under. You have to be able to give value for money, otherwise you do not exist. Rainer, how much money to start your journey, mate? Some people can start with as little as 100 Rand a month. Other people can start with 100,000 Rand a month. It all depends on your personal circumstances. You know what? If you can start teaching your children to save 10 Rand a month, that's the start of their investment journey, and that's good. The amount you need to start depends on your personal circumstances, the goals you have in life, what you want to achieve. Mum G says, what happens when I started to invest in tax-free savings but couldn't max the account? Do I open another account? No. You can max the account. There is no ways that you cannot max the account. The only time you cannot max a tax-free savings account is when you do not have 36,000 Rand per year to invest. But if you only have 10,000 Rand for the year, all it means is it's going to take you longer to fill up your 500,000. Because if you do not do 36,000 Rand every year, if you do 36,000 every year, it takes you 13.8 years to do it. If you don't, and you do only half of that, 18,000 Rand a year, then it's going to take you double the time. It's going to take you 27 years to fill up your 500,000. But you can always max out your tax-free savings account. There is no reason not to be doing it unless you cannot afford it. Almost finished here, folks. Let's see. Mazad, how can one, not a risk taker, invest 200k for good interest? Mazad, you go to the bank, you ask them what they will give you as an interest rate based on the different investment products that they have, because they've got money market accounts, 30-day call accounts, 6-month call accounts, and then you have to match whatever product they offer you with whatever your need is. It won't help you to take a 6-month fixed deposit when you need an interest or an income on a monthly basis. So that would be my advice. With 200,000 Rand, go to the bank, get the best possible interest rate based on the product that suits you, and that's what you do. Okay. Browns Hugar, please can you recommend a good fund manager to manage an investment fund, or where do I find them? Tralala, here I'm sending. So, Brown Sugar, I'm the financial advisor. This is the person you want to talk to. The fund managers do not speak to individual investors. The fund managers manages the fund. So it's my responsibility as financial advisor is to do the investment for my client, and I choose a fund manager that I believe will do the best, and I invest the money with that fund manager. So I'm actually the person you're looking for. The fund manager Don't want to talk to those oaks in any case. They've got thick glasses and they're very analytical. Tic tac toe, la la la. That's why I'm asking. Yeah. Thank you very much. Me and you gonna have a lekker chat. I see that coming. Webster, Cornay, do you personally have any pension provident fund products with Discovery? No, I do not, Webster. Discovery is a very good company, but personally, I'm not the biggest fan of their investment products or some other products. Medical aid, I think they're brilliant. Marketing, they're fantastic. IT, fantastic. I'm just not the biggest Discovery fan on investments, although last year I saw one or two of the investments that raised my eyebrows, which were doing very good. But RAs, no, I prefer to make use of Old Mutual there. Clinton, what's your take on investing directly into Allan Gray versus via an insurer and selecting Allan Gray? So the only difference is if you're going to invest directly with Allan Gray on their platform, they give you a specific fee for the fund that you invest in. Let's say the fee that they charge is 1.4%, okay? If you then go to a different insurer who has Allan Gray on their platform, if you then make use of the Allan Gray, then it's just not going to cost you 1.4%, it's going to cost you 1.6%. It's going to cost you a couple of extra bips for Allan Gray to have the fund on that investment platform. That's the only thing. So if cost is the big thing, and everybody always wants to save on cost, then you have to invest with a specific investment company and only make use of their portfolios that they have on their platform. Then you get it at the cheapest possible price. But like I always say to people, sometimes people are penny wise, pound foolish. It doesn't help to invest with company A and you use their 3 portfolios, and their portfolios only give you an average return of 8%, whereby if you could have invested with them and you made use of one of their portfolios and 2 other portfolios from outside companies, and now even with the bigger cost you can get 11% return on investment, then it doesn't make sense to just use Allan Gray in their portfolios because you want to pay the lowest cost. And that's where it becomes important to understand the risk profiles, how the funds are doing, etc. I tell you one thing, folks, there is very little to choose these days between companies and the cost that they charge. And people get so hung up on the cost that they miss out on the growth. If you invest in the right portfolio, which is suited for you, which is in line with your risk profile, and you do it for a long period of time, the cost is not a factor. I know you think I'm talking nonsense now, but it's absolutely 100% the truth. Okay, Ren, shed some light on endowment policies. Ren, I don't know what more you want me to say about endowment policies. Endowment policy is a 5-year or longer investment. You put your money into a portfolio. All taxes that's relevant is taxed within the portfolio. When you withdraw your money one day, it's all after-tax money, or tax-free as everybody referred to, and then you can withdraw your money as you want. Once off, monthly income, doesn't matter. Okay, folks, it's getting time for me to go and have supper, so I'm going to run through a couple of these quickly and then I'm going to say goodnight. Why have the repo rate stayed unchanged when inflation is at 3%? We need to stimulate the economy. Michael, I think you should just hang tight. It flows through with time. Remember that repo rates is not adjusted on a daily basis. It's adjusted, I think, quarterly. I'm not 100% sure, by the Reserve Bank and so on. So just wait. It always comes through a bit later. It's almost like playing golf. You play 3 good rounds and then your handicap your handicap stays the same. And then once you play 3 bad rounds, then suddenly your handicap drops when you can't afford it. Brian Sugar, I've answered that one about good fund managers. Like I said, banks don't offer derivatives. As far as I know, you are correct, they don't. If I start a tax-free savings 7 years in the bank, is it worth to switch it to tax-free investment? Floyd, absolutely. If you are in a tax-free savings account that's offering you 5 or 6 or 7% return for 7 years, then move it over to an investment where you're going to get 9, 10 or 11%. I mean, unless you're only going to be invested for the next 6 months, then it doesn't matter. But if you're going to be invested for another 10, 15, 20 years, then absolutely, then it will be worth it. Godfrey, what's your take on retirement annuity to reduce tax as a 9-to-5 worker? Godfrey, it's one of the most wonderful investments that there are. Retirement annuities are really great. The problem is that people do not understand when we explain how a retirement annuity works, and therefore they don't make use of the tax rebates that they get on their retirement annuities. And if you do not want to put in the effort to understand that and then to use the product the way it's meant to be used, that's when people get disillusioned and they think it's a bad product. But retirement annuities is the best investment in my eyes of all investments, especially if it's done over a long period of time. If you look at the tax rebate you get, you reinvest that tax rebate, you get the growth, you're getting better growth than any other investment is going to offer you. So, Godfrey, retirement annuity, good. Make use of it. I'm not going to have the time now to explain it to you, but you're welcome to contact us and one of my advisors can speak to you and explain to you how it works and then help you to implement one. Thank you for sharing. Bless you. Gratitude. Thank you very much, folks. Thank you very much for spending another Thursday night with me. I really enjoyed it. I am going to sign out and sign off now. Please keep on watching my videos and follow. I am planning 1 or 2 interesting things of what I think or hope to be interesting in the future. I will try and send it out as videos, invitations and so on, and let's see if it works. Keep well. I'll see you all next week Thursday. Have a wonderful weekend. God bless.